Fed Chair Powell wanted to make sure he was very clear, delivered a short message that they are going to remain committed to fighting inflation, and that eventually policy will become very restrictive, and that will lead to some hard times for some parts of the economy. I think that the Fed is really locked in a position right now where they were late to begin tightening. They were wrong about inflation being transitory, and now they really put themselves in a corner where they have to deliver rate hikes aggressively, and you'll probably see that um, they're going to be data dependent. So the September 13th inflation report will determine whether or not they raise by another 75 basis points, or if they can go at a slower pace at 50. But I still think that you're going to see the market is anticipating rate hikes for the rest of the year. Inflation is coming down, but it's it's not dropping as fast as a lot of households need. I think that the low-income families are really feeling the pinch here. I think when you take a look at luxury goods, I mean, uh, the haves are doing pretty well. It's that I think after more months of just elevated food and energy prices are really going to I think hurt most households that are making under 100,000 a year. And I think what's interesting is that we're seeing oil prices and somewhat be comfortably above that $100 barrel level. But I think the risks, though, that throughout this winter is that we're going to have another spike. And if energy prices once again spike during the winter, that's going to complicate, all these calls for a slower pace of tightening. So I think we're still in a situation where much of these inflationary pressures are going to be determined by um, whether it's the war in Ukraine, whether it's China's COVID situation. There's too many factors that could keep inflation much higher than I think most people are anticipating, and that could really lead the Fed to having to deliver even more rate hikes than it's currently pricing in.